Good afternoon, everybody. It is gorgeous out there today. So we'll get going and get you on your way so you can go enjoy the lovely day outside. Today we have Terri Pimento, who is an independent insurance agent. She's going to be here talking about final plans expenses. Yes? Okay, thanks.
Thank you. Okay. Well, thank you so much to Debbie for asking me to, or allowing me, I should say. I had asked her. So as Debbie mentioned, I'm an independent agent, and I speak with people regarding insurance to take care of final expenses. So really, I'm just very casual. I don't want it to feel, very structured and formal. Anytime you have a question, please just raise your hand. It's not, it's not an issue. I don't have like a format I have to follow. So I'm basically going to just touch on some of the topics on that sheet there. And the reason I do this is because there's a lot of seniors that are not kind of aware of what's available to them in terms of life insurance as a means to pay for final expense. So there are basically, if you want to break it down to simplify, two types of life insurance. There's term and there's whole life. You have heard the phrase final expense in recent years, which is nothing more than a fancy word for whole life permanent insurance. And term insurance is something that you had perhaps years ago through an employer. You might have had it when you first purchased a home and had a mortgage to cover. It's basically a period of time that covers you with a proceed amount, with a death benefit amount, but it does term out eventually. Oh, that's okay, sorry. So term's great for a period of our lives, but as we get older, what you really want in place is permanent insurance. Whole life, something that isn't going to cancel, or the rates are going to increase. So whole life is, as I said, permanent, and it locks in on the current date and age and health of your current situation. So basically, once you get the policy, the day you get it, it's based on there's no medical exam, but based on some questions that I might ask you. It's based on your health, and it locks in, okay? So it never cancels. As you age, it doesn't cancel, and it doesn't increase. The premiums don't increase as you, maybe have a health condition or something like that later on. So that's pretty much it. There's term and whole life. And again, the reason they call it final expense is because companies got savvy a few years ago, and they decided people were living longer than their term insurance. It was terming out, and seniors need something to cover their burial so they don't leave the burden behind. So essentially, life insurance isn't for us, right? It's for who we leave behind. So I always try to encourage everyone to think about the fact that if you can leave a little something in place, it's better than nothing. It sounds cliche, but something is better than nothing, because over the years I've had so many people say to me, well, I want to have $20,000 put aside, or I want to have X amount put aside for my kids. But at the end of the day, seniors are on a budget. There's only so much you can do monthly. So I always say, get what's affordable. You can always add if you wanted to later. But the bottom line is, I know when my mom passed, I still had to put a little bit out of my pocket, but at least she had what she could afford at the time, and I appreciated it, right? So something's better than nothing. So just to kind of stay on that beneficiary, your beneficiary receives the proceed, obviously income tax free. You may already know that, you may not. But basically what would happen is you would establish a beneficiary at the time of getting your policy, sibling, child, spouse, and that beneficiary gets the death benefit upon your passing. It's that simple, really. You can name a couple of different beneficiaries. You don't have to name just one. It can be multiple among children or what have you. And then the other thing that you can do is you can actually name a funeral home as a beneficiary. So sometimes people don't want their children arguing over it. Sometimes people don't really even have anybody to handle it, unfortunately. I have several clients who don't have anybody to take care of it for them. So they've appointed the funeral home the beneficiary directly. So let's say you have a $10,000 policy. You sit down with the funeral home and they say it's going to be $8,000 for your wishes. $8,000 can be appointed directly to the funeral home, and the other $2,000 could go to a remaining person, whatever's left over could go elsewhere. But you can definitely appoint it directly to the funeral home, so there's no worry whatsoever. While I'm on the topic of a funeral home, If you have $10,000 underneath the mattress and you want to go put it aside and pay for your funeral up front, that's great. Most people don't, and most people inevitably will have use for that $10,000 that's under the mattress for something else, right, as life goes on. So a really great alternative to paying the funeral home is buying a life insurance policy, in terms of savings, if you will. As it correlates to, direct cash. Like I said, if you had $10,000 put aside, think of it this way. If you go and sat with a funeral home and they said to you, it's going to be $10,000 for what you'd like, it'll cost you, let's just say $40 a month. So you start paying the funeral home $40 a month. If you die in a couple of years, you've only paid the funeral home a couple $100 at that point, right? So you haven't gotten to that $10,000. That will be the expense. With a life insurance policy, you pay $40 a month. You've gotten that $10,000 signed up, locked in, and if you do pass in a couple of years, your beneficiary gets that $10,000. Does that make sense? So there's a real difference there. Again, if you had the money put aside and you wanted to go do it, that's one thing. But if you're going to pay monthly, it's a really great idea to think about paying a life insurance policy first. So basically what happens is you can qualify based on your age and health. As I said, there's two different types. There's something called immediate coverage, which would mean you'd be immediately covered if in the event of your passing. And again, that depends on your age and your health. Then there's what you see in the mail all the time, like through Colonial Penn and some of those other companies that flood your mailbox, right? And all the TV ads you see on TV. Those are all 2-year wait periods. So there's a 2-year, some are 3, AAA's 3, some of them are 3-year wait periods where if you had a $10,000 policy that you purchased, you would have to wait 3 years from now for the full benefit to be paid off. If you have some extenuating health issues, you could get a graded benefit. What would happen is all premiums would be paid back plus 10% interest. So you don't lose anything, but you do have that 2-year full waiting period for the death benefit to be paid. So that's just, but many times people don't even realize, you're healthier than you think when you start going through the questions. So it's actually, there's a lot of people that do qualify for immediate. Big important thing to realize, nursing homes and hospitals cannot access your benefits, okay? So if you have a policy in place, a couple years from now, you have to go into a nursing home or you go to the hospital, they cannot access that money. That is safe, tax-free. Think of it as a safeguard. It can't be touched, all right? So as long as those premiums are being paid, it's in place, it's covered, nobody can access it. And that's really important. And also if you're receiving benefits, Social Security, a lot of times people are on housing budgets. They can only have so many assets when you sit down to go through your budget, right? If you had a $10,000 policy in place, that doesn't mean you have $10,000 worth of assets immediately. Yes, it does build cash value because it's a whole life policy, but it takes time to build that. You're really getting it at this juncture for the death benefit. So a way around that is if you had it a couple of years and it started to build up some cash value, you basically just appoint your beneficiary. Let's say we can appoint them the owner of the policy. So there's definitely ways around it. There's a lot of little loopholes in life insurance people don't know. Importantly too, the way that the monthly payment is set up, you can do it through a checking account, a savings account. Transamerica also allows the debit card to be utilized if you have, like a benefits debit card. So the reason that's really important is because, as a matter of fact, I've heard so many stories of this happening. People, let's say they had to go in the hospital for a period of time and they missed a premium. You've been paying all these years, you go in the hospital, you miss your monthly bill, right? At least when it's coming out of your account automatically, there's no issue. Wouldn't lapse, wouldn't cancel. I stay very involved with my clients, so if you miss a premium, I'm on it. I say, oh, you missed a premium this month, let's get you back on track next month. It doesn't lapse immediately, but after 30 days, there's a lot of companies out there, they won't come after you, believe me. They've been being paid, they're good to go, right? They're not gonna, unfortunately, track you down, right? So that's a really great thing. It can just come right out of your checking account, or savings account. You can pick the day or the week. It could be the 3rd Wednesday of the month, or it could be the 7th of the month. You know what I mean? You can pick whichever. Anybody have any questions before I kind of go on? Nothing yet? Okay. What else? So The other thing that I like to make sure people know is the burden on your family. I mean, obviously, no one wants to leave the burden behind, but one of the things that I always tell people is if you have something in place, obviously you want to make sure your loved one knows where your policy is. Millions of dollars go unclaimed every year because people don't even know they have it. You know, there's been so many stories that I've heard over the years where people didn't even know they had a policy. So I always say make sure, even if you have something in place now, whether or not you work with me, just make sure your loved ones know where your policy is. Make sure they know who the beneficiary is. Because again, the insurance company's not going to track anybody down, right? So yeah, you can just basically name who you want. You can always change it. If anything ever comes up that you need to change it or make, I have unfortunately lots of seniors that have been scammed, a lot of scam artists out there, right? So if something happens, your account gets shut down, you need to change accounts, you move, anything at all, just keep in touch with me. So I work with companies that have been around for a long, long time. So they're very reputable and the reason I work with them, quite frankly, is because I can do that. I'm an independent person, I'm not a captive agent. So if I sit down with someone who has you know, a heart condition, they just had a recent heart attack, I can still help them out with a policy. It won't be, the premium will be a little higher, but it's not astronomical. Some companies, when you reach into that category, it's very, very not competitive, for lack of a better word. Does anybody have any life insurance in place right now? Yeah? Has it been in place a long time, or, yeah?
Since I was 21.
Oh, okay, great. So is it whole life?
It's whole life, it's potential,
Oh, yeah, yep, good, excellent.
and it's grown.
Right, it's got that, though, they don't sell those policies anymore.
No,
No, they do not. That's
they
it,
wanted me to change it in,
to convert it,
yeah, and I said no.
yeah. Well, you could always get a little more of something else. Leave that one alone, because it's gonna build.
Yeah.
Right, exactly, yeah, I have a lot of clients who have multiple policies. Do you have a question?
No.
Oh,
but
okay.
I had one for about 35 years.
Okay, you don't have it anymore?
I do.
Oh, you do, good,
Oh, yeah, it's paid. It's
excellent, good.
It's good.
That's good. That's great. I've sat with so many people over the years, they thought they had a permanent policy, and then, you know, you flip through the pages, and at the very last page, in the last little line, it tells you that it's, you know, term. It's going to cancel, or it's going to increase when you get to age 75 or age 80. And then at that point, you can't even afford the premiums. So it's important that, I do that as well. I mean, that's part of what I would help you with. If anybody ever wanted to review what they have in place, just to make sure it's what you think it is, you know, I'm happy to do that as well. So, does anybody else have it in place, or so you do? Is it term or whole life, or you're not sure?
Give me some of the terms. I think it's whole life. I mean, it's good forever. I pay every month, though.
Yep.
It comes automatically out of the bank.
Perfect, great. So it's not going to cancel. It's whole life permanent. That's what you want. That's great. Yep.
I was lucky to get it too, because when I had breast cancer, I got it after that, but I was able to get the policy.
Oh, how long ago did you have that?
99.
Oh, well, so happy that you're, yeah, good. Yeah, I've had lots of friends. Yeah, good for you. Yeah, and that's a good point in terms of the way they tier it. If you had cancer 10 years ago, you're beyond that threshold, you're good to go. It's considered immediate coverage, and you're good to go. If you had cancer, you know, last year and you're just kind of in the middle of it, it's a little more costly to get it. And so what I do in those cases, oftentimes, if I sit down with someone who still wants to get it, it might be a little more initially, but then once they reach, you know, the cleared mark, we kind of redo it, and then you can get them a better rate. Same with smoking, non-smoking. If you're a smoker, of course, it's more. So I've had lots of people over the years, I'm no longer smoking, so we can rewrite it for less. Yeah, so it's great. So, what else? I don't think that there's a whole lot more that I didn't mention. I just want to make sure I don't put you to sleep. But I think I pretty much covered it. If you, if you do want to meet with me, I can leave, I have business cards up here. I could arrange, an appointment to sit with you at a later time, because it's private. A lot of times when I do these engagements, people will want to sit with me right after, and I'm happy to do that. I definitely have some time. But a lot of times it's great to just kind of make an appointment and sit with you individually later, just to kind of go through everything, because it's kind of a private matter. No one wants to say, hey, I weigh X amount of pounds, or, Yeah, you know. So it's kind of, well, here's my social security number for everybody to hear, right? Of course, obviously, we wouldn't do that. I'm just being funny. So, anybody else have any questions? Yes.
Yeah, just my own information. Cancellation policies, how does that work? And do they differ?
So, cancellation policy for the insurance, if you have a policy in place. So basically, you can just stop paying it and be done with it. If it's a term, it's not a big deal because there's no money in it anyway. If you have a whole life policy in place that you want to cancel, I would recommend surrendering it. So what you want to do is you want to surrender it for the cash value, depending on how long you've had it. It won't be a lot if it's only been a couple of years because these things take time to build. But why give it to the insurance company? Surrender, get the cash value. Yep, absolutely.
So there's no penalties or anything?
No. It just ends. Sometimes I've had clients where they want to surrender it, and for reasons unbeknownst, sometimes the kids will come in, kids will get involved, and the kids will say, "You don't need to worry about that. I got you covered." But it's silly because they're the one that's going to get it anyway. 9 out of 10 times, I deal with children of my clients, because they want it, because they don't want to have to pay for it. But every now and again, you get someone that says, "I got you covered. You don't need to worry about it." So if in that case, I would say, what they can do is, instead of most companies, well, I know Columbian does. I think most of them, if it's a whole life policy, you can, rather than just completely surrender, you can either surrender and take the cash value, or you can convert it to a 2-year term beyond the date. So, for example, if you did it today, it would cover you for 2 more years. You would no longer pay premiums, but then at that point it would end. So it's either take the cash value or convert it into a term, and at least you're covered for 2 years free of cost. And again, depending on how much value is in it, you have to kind of do the math in your mind and say, well, is it worth it? Especially if you're in your, not that we ever want to put a time frame on when we're going, but because only he knows, right? But if you're in your late 80s, why not keep it for another couple of months rather than, a couple of years, I mean. Does that make sense? Did I answer your question? That was a lot of babble for that.
That was good.
Okay. All right. Anything else? No? Okay. So I'm going to pick out, did everybody get a ticket? Did everybody get a little?
Yes.
You got one? Okay. You didn't get one? No. Okay. Okay, you were late. It's just a little something. It's not a big deal, but.
She's gonna give you one.
Yep. I think I gave everybody one, right? Oh, you?
Give you one of these, Joyce? No. She'll get it.
I didn't? Oh, thank you.
You were getting coffee.
Are you trying to get 2? Just kidding. Okay. I gave you one, right? Because I know I chatted with you. Yeah. You're welcome. So the last 2 seminars I had, I didn't give you one either. Wait, hold on. I got to get out. Okay. What's that? Oh, you did? The last 2 ones I did, I had the person who picked. Yeah, you want to pick? The last 2 ones I did, the person picked their own self the winner. Okay, can I just read? 693496. That's you?
No, I don't think so. I think that's an 8, isn't it?
That is an 8.
Okay.
693496. Oh, was it Linda maybe?
Maybe.
Okay, we'll do another one. I'm going to give the troublemaker the chance to pick it out here.
Okay. 693493.
493. You got it? Okay, thank you. The last 2 I did, the person that picked actually picked their own, so it was kind of funny. There you go. You're welcome. Just a little something. Oh, yeah, you can throw your tickets in here if you want. Of course. Thank you. Welcome.
Recycle it.
Yeah, exactly. Anybody? Oh, I like your pin. Uh-huh. Okay. You're very welcome. Well, I hope I was able to answer any thoughts or questions you have. I mean, oops, life insurance, it's not,
But I forgot, when I got it, actually, it was longer than that. We took it out with my husband for my daughter.
okay,
And I forgot that it's tax-free for the beneficiary.
exactly, right. And another great thing is, too, you can,
We got it through the military, and it was dirt cheap.
oh, yeah, back in the day. Absolutely. Well, like I said, it's more affordable than you think. A lot of times people think, oh, I'm 70, I got some health issues, I won't be able to afford it, or I'm 80. We can write to 85. Past 85, I can't help you, unfortunately. And inevitably, I always have someone in the audience who's 90, and they shock me. They say, I want some insurance, and then I look and they, how old are you? And they're 90, and I'm like, oh my gosh. So, but one of the things that you can do too is one of the things that's built into the policy is it's something called an accidental death benefit. And that just means you can add on for like $1 or more. Let's say your premium's $40 a month. It's usually around 42 or 43, a couple dollars more a month. And what that does is it doubles the coverage. So if you have 10,000, it doubles it to 20,000. And the other policies, the ones that there are a 2-year wait for, if you have some health issues, accidental death, it covers it immediately, so that's great too. So even if you were on a 2-year wait period, if your death was accidental, it would be covered immediately. And again, you don't lose anything on those because you get all premiums plus 10%. And then one more thing that's built into them is something called accelerated death benefit. So if you have a $10,000 policy and God forbid you were diagnosed with something terminal, you can pull 5,000, which is half. You could pull 50% out of the policy to help with medical expenses or, just daily living expenses if you wanted to. And then, of course, the remainder would go to your beneficiary. Some people don't touch that. They leave it alone, but it's built in. It's built in, yep. So thank you all so much for coming. You're welcome. I hope it was helpful. It's not exactly a fun topic sometimes, right? But like I always say, it's one of those things, it's like medical insurance and car insurance. We hope we don't have to use it, but kind of necessary to have sometimes, right?